Hello, it is Ryan from happytrader.io. It is November 24th, 2023. Hope everybody enjoyed a happy Thanksgiving. In today's video, we're going to be comparing two different strategies. This is something we've been getting asked about quite a few times, most recently in our YouTube comments, and it's whether or not a long only strategy is going to outperform a long and short strategy. Now, to kind of preface this, I want to go into this and say that if you're going signal to signal, your long only strat is going to be kind of like your bread and butter, right? Because over time, most years, the market tends to have an upward drift. Now, that's not to say that the market doesn't correct, that it doesn't sell off, that it doesn't go into, huge 14 plus month bear markets. It's just to say that over time, if you're kind of a long-term person and you're buying stock and you're putting stuff away into retirement accounts, those are long only strategies. And that's the same thing when you're doing swing trading or day trading. You're going to get a lot of upward drift. You're going to notice a lot of people are buying into the market, and there's a lot of different reasons for why. So it's not just the big players moving the markets around and all that, but we are going to do a back test here on the ES futures. This is going to be the E-mini S&P 500. So this is going to be the leverage derivative futures contract based on the SPY or and anything that kind of just goes hand in hand with the S&P 500. So without further ado, we are going to fire up our long and short strategy. And there you have it. Let's actually go into our parameters. We're going to shrink this down. Let's actually just start with $1,000 account. We're going to do this for a small account. We'll make sure the orders are not pyramiding, meaning, if we get two signals in the same direction, we're not trading, two contracts. And we'll just make sure that that's all good and gravy. And we will turn on our deep back tester, which allows us to analyze just this date range here. We're going to modify this date to today's date, the 24th. And we can see that for the long and short strategy, what we are doing here is we are going to buy on these uptrend signals. Let me actually hide this for a second. So we're going to be buying on these uptrend signals, selling on the downtrend signals, but then also taking a short on that downtrend signal. On the long only, we're only going to be buying on the uptrend signal and selling on the downtrend signal. Now, again, would love to preface this by saying we're just going signal to signal. A lot of times when you get these short signals, you can make very nice scalps. So it depends on your style of trading. There's also one other circumstance that I can think of just to kind of educate you. I know not everybody's as sophisticated as to sell options premium when we have kind of like a semi-elevated VIX, or even when we don't, and you're selling, let's say, early in the morning to try to capture some theta decay. What you can do is utilize some of these buy and sell signals. Let's say you're somebody who likes to sell those 5 delta or 8 delta out of the money 0 DTEs or whatever it might be, even if you're not selling 0 DT and you're doing 1 DTE or whatever. These signals can be very helpful for that. Now, taking at the money trades like an ES futures contract, I like to look at the ES like you're kind of, you're in the middle of the battle. And I look at selling options premium as like, you're selling up here and down here. So you might get a downtrend signal, but your position's like up here, where with the futures, you get a downtrend signal and your position is in the actual battle. So you're kind of a commander when you're selling options. And when you're doing futures, you need to be directionally correct, or else have some risk management in place, like hedging and stuff like that. So let's get into the long and the short. We're going to bring that one up first, and you can see that the strategy is superimposed directly over. You can see that we're buying our AI, then we're closing the order for buy AI, and we're selling one net short. And we can go back up to the strategy, and you can see that on $1,000 account with the long and short strategy in deep back testing, we had a really rough start. So look at that drawdown, 6 grand, right? So what that means is that if we would have started with $1,000 account, we would have drawn down to where we would have been margin called on the long and short strategy. And not just a small margin call. This is going to be a pretty decent margin call, right? 6 grand is nothing to scoff at. So a couple other notes to kind of point out here. The percent profitable. So, generally happytrader.io, sentiment AI with Illumitrend performs around a 27 to let's say 33% win rate. So profitable trades. So that's our win rate, okay? So you're probably thinking, well, how do we have an 1800% expectancy? Sure, we had this drawdown. Sure, we had this drawdown, which is not pretty at all. But at the end of the day, if we would have stuck to the strategy, we would have had, an $1,800 or 1,800% and an $18,000 net profit. And, again, like I say in my other videos, is the win rate isn't what's important. It's actually how big your wins are compared to your losers, right? You can have the smallest win rate, but if you are constantly making, let's look at the list of trades, constantly just outdoing, your winners are just larger than those losers. Let's go down the list a little bit here. For instance, you saw that 4,000 there, and there's a 1,200, and you can see that, sure, yeah, we're dealing with the ES. This is a really large contract, but you can see that over time, those strings of winners are eclipsing the size of those losers, right? So that's why you are able to end up with that at the end of the day. Now, if your account had $10,000 in it, you would have drew it down to where you had about 3 grand. You would have been thinking this strategy is terrible, and who would have traded this strategy, all the way up to 200, trades or whatever without seeing that positive drift. Now, you did start to see some drift up and then you just had this big divot, right? So that's the thing with long and short only. I guess what I'm trying to say is it's more suitable for people who want to get trading ideas on both sides of the market, but maybe who aren't trading futures, maybe who aren't trading. Folks who aren't trading directly at the money, if you're an options trader, maybe folks that like to sell options premium at the 5 to 8 delta on 0 DTE, 1 DTE, whatever, maybe even 7 DTE. It depends because the price of the underlying is going to move that options chain regardless of the DTE. So you have to just be mindful of liquidity there. And that is the long and short back test year to date 2023 for the ES. Now let's pivot and we're going to switch over to the long only strategy. Now in this strategy, we're still going to use the same parameters. We're going to set the strategy up exactly the same. $1,000 starting account. We're going to use one contract. We're not going to put any successive orders if we get signals in the same direction. We're going to make sure that our date range is correct. We're going to make sure our previous strategy is disabled. And Happy Trader Sentiment AI with Illumitrend is turned on, obviously. That's the strategy that we're working on. The last check we want to do is make sure that our superimposed signals match directly up with our signals. They do. You can see that if we toggle on and off, you can see up here, our back test is spot on, and that's very important. Even just having slight variations in the back test is going to cause skewed results. So props to TradingView for having such a robust platform. We're not sponsored by them in any way whatsoever, but we decided to design our product for them. So let's go ahead and look at this long only back test now that we have all of our parameters in place and deep back testing is turned on. And this is going to be a smoother looking equity curve, and let's see what the drawdown was. So less of a drawdown by about 1/3. Now, one interesting thing is that you can see not only did we get upward drift, we did have this carve out down here. We took a max drawdown. It was significantly less than the long and this is just going signal to signal than the long and short. We had 608 closed trades, but we had about the same winning percentage. Now, same winning percentage, but going long only 2,600%, where the market's doing 7 to 11%, roughly, give or take, compounding over time. So even trading just from the uptrend to the downtrend signals, and this isn't like the way that a lot of people trade. Sometimes people will get the signal wait for a retrace, and then jump in on the signal and take a scalp. And that's perfectly fine. And that's something that we will be engineering a back test on as well. Is like, hey, if we get a signal and then it retests up to a certain point and it starts going against our position, and then we take the trade and scalp, what does that equity curve look like? So make sure you like and subscribe if you want to see some of that quantitative back testing, some deeper strategic back testing depending on what we are doing. And we're also going to try to test the limits of TradingView to see if we can in fact get that options theta decay strategy where we're selling 5 to 8, maybe even 10 or 12 delta, or collecting X amount of premium based on these signals to kind of hang out here, up here and down here, instead of being right in the trenches. But you can see that this is a great back test, still winning just under 1 out of 3 trades. But you can see the performance summary is, phenomenal. You can see the list of trades. You are going to get bigger strings of losers, but your winners are going to dwarf your losers. And we can go and see again, the drawdown was small, and then we carved back up into the positive. So in this scenario, you would have been margin called like 2,800 bucks. But if you're a smart trader, you already have some pad in there. We're just doing the absolute lowest. A lot of traders ask us, hey, what's the absolute lowest that I can trade with? Usually around $1,000. On an ES contract, though, you got to be really careful. You will get margin called, especially in a more volatile, high VIX environment. That volatility index is up. The other alternative that you can do that I mentioned in other videos is you can just go to the MES, right? So you can just generate 1/10 the size contract. You're going to get about 1/10 the size returns with a similar graph. And that's the magic of using something like TradingView, where, our strategy is kind of translating over directly. And, that's going to be your alternative. So instead of drawing down, thousands of dollars, you might draw down under $1,000 and then still dramatically outperform the market, as you can see right there, with a 282% gain. And then the list of trades is a lot more tame. You can see those losers are way smaller, and the winners, generally way bigger, right? So that's kind of how we're looking at things. I'll just kind of scroll down a little bit. You can see some of the bigger ones, and then the small losers, whatever. So that's going to be 600 trades in the year. It's not bad. Average bars in the trade on the 5-minute chart, 58, not bad at all. There's people who make this many trades in a week, and it's pretty typical stuff. So this back tests out really well. We're doing significantly better than the market. And again, if you figure out kind of your own way, if we just remove the back test, and you don't just rely on trading long only just because it back tests out well. As they say, past performance is not indicative of future results. So you may want to figure out a strategy that works best for you, such as waiting for an uptrend or a downtrend signal, waiting for a retracement, and then jumping in on a move for a small scalp. That'll work both directions with our indicator, which is proprietary and not freely available. It is happytrader.io, sentiment AI with a Lumitrend, $47 a month for a limited time. And I love doing these videos as the CEO and head quant, and we've had a lot of positive feedback in regard to derivatives such as futures and options and how our indicator works with them. So I'm going to kind of leave it there. The conclusion is really that this long only strategy is going to perform significantly better in terms of equity curve, in terms of overall returns, and just in general, your list of trades. Whether or not you want to trade 1/10 the size contract or the full contract, that's going to be completely up to you and your risk tolerance. But you can see if you trade 1/10 the size contract, even if you're doing it on paper trading, real trading, whatever, you're going to have bigger strings of losers when you're only winning 1 out of 3 trades, but you're going to have these monstrosities of winners. And when you get them all in a chain, and then you have these like tiny loser trades, that's where you end up with your significant winner. So just go ahead and smash the subscribe button, as they say, hit the like button. And if you're interested in quant stuff and back testing, and you can check out our indicator, which works on any pair, any derivative, any stock at happytrader.io. And of course, we put all of our videos, some of them are trades that we perform on the market during market hours. and others are back tests and just explaining how great we think our indicator is, and the performance and the back testing kind of speaks for itself. When the market does between 7 and 11% roughly average annual return, and we're able to do, like 10 years of returns in one back test. So just putting that one out there. But anyway, this is Ryan, CEO, HeadQuant, HappyTrader.io. Hope you had a great Thanksgiving. Be safe. Try not to overeat again. And well, I think I'm going to take my own advice there. And happy trading. Have a great day.